Tim, how we doing?
I need to make that my ringtone on my phone.
It's such a good
Well,
beat.
thank you, Spencer. Good to see you. Joel, Dennis, you guys look happy.
Not really. We hide it well.
We're never
I'm
happy.
really sad inside.
Never happy.
Well, I was listening to your comments there in the last couple of minutes, and Dennis, about your feelings on the state of the market.
Yeah.
Don't you think that the appearance of Representative Maxine Waters on CNBC to talk about market structure, that's got to be the signal of a market top, doesn't it? I mean, if you read the classic texts on market structure, what you will find is history has shown that if Maxine Waters is on CNBC, on Squawk on the Street, that you should hedge for downside risk. I believe that's what it
That would have been a good thing to know last week. Tim, but it's all seriousness. Jump into your indicators and let's take a look here, because we can give you some specific stocks. But what are your thoughts on the market overall? I mean, we've had a good run. Do we need some cooling off?
Well, we certainly have, and it's been a good run on the ski slope in Steamboat Springs, by the way, too, because ever since the market.
Can we just? I always want to interrupt you, Tim. You're coming in and out. Your mic's coming in and out.
Are you wearing like a clip-on mic or something?
I am.
Yeah,
I am.
Are you on the ski slope right now?
We hear you and then we don't. We hear you then.
No, he's wearing a good mic. It's just it's the positioning is janky. So just
is that what? Okay, did that improve it?
Just don't move a lot.
Okay. So before I answer your question, I was going to say, for those who like to ski, so ever since the market bottomed, which was, I think, the last Friday of January, and I was in the Caribbean, since that time we have had 90 inches of snow in Steamboat. So for those of you who remember your elementary school math, that's 8.5 feet of snow. So then back to your question about the market and how we think about it. We always look at how the short-term supply and demand, we think of that as market sentiment, market structure sentiment. And it's not mass psychology, it's the supply and demand for stocks. And there are factors to consider behind that, but we always look at that and whether it's rising or falling into options expirations, which were Wednesday, Thursday, Friday last week. And market structure sentiment, as we measure it, it has peaked. It peaked on the 18th. Today we have new options trading. If you go back a year, you'll remember that February 24th marked the beginning of the great and brief pandemic correction. And that was the day that new options were trading. And heading into that, demand for them fell 5%. And so that was an immediate indication of risk in the marketplace. And we look at the amount of trading volume that comes from what we describe as risk management. Those are trades tied to derivatives. And believe it or not, they're 18% of the market. So if you have a sudden deterioration in the belief of future prices for things like low volatility trades or options or futures, 18% of the market cap can vanish. We don't see that here. There has been a decline, however. There was about a 0.5% decline in demand for options. And then Friday is a big futures contract expiration.
In the month.
Exactly, used by trillions of dollars of passive money to true up tracking. And I think there are a lot of tracking errors in the market. So if you put this whole soup together, what do we think? Well, I think it's going to be very difficult short term for the market to reach new highs because of those factors. We'll see. I'm wrong at least half the time.
but 50% of the time, it works every time.
Right. The good news is that market structure sentiment is very reliable. I mean, it's prices are volatile and sentiment is not. That's the good news. So.
Okay, we're going to jump into specific stocks then, too. Can you do some specific stocks and jump into your indicators?
Yeah,
We've been talking Tesla all morning. I want to get what your your thoughts here, looking at your indicators here with Tesla, because stock has just been kind of hanging out here for a month, leaking slowly. Now we're down $20. It's taken out the lows of the move. Joel's been concerned about the 780 level. We're piercing through that this morning. What are your thoughts here on TSLA?
So let's add that, and there's another thing that Spencer, I was thinking about after you and I traded notes that I want to talk about, because this idea of short squeezes has really dominated the discussion. So I'm going to add Tesla here. By the way, traders, you can go to Market Structure Edge and do exactly what I am doing for free. Just go try it. You don't need a credit card or anything. You can set up a portfolio and do exactly what I'm doing here. I added Tesla to this portfolio, and I just want to go look at sentiment. Notice it's 1.8. So here's Tesla. Market structure sentiment is 1.8. It's a 10-point scale. So it's way below 5. If it's above 5, it rises. If it's below 5, it doesn't. And it's very statistically and significantly true. So, and the sentiment trend is down, and it's 56% short. So if you want to buy Tesla, you want these things to be the opposite. You want this to be up, and you want this number to be below half of the trading volume. So, and you can see these things coming. So if you look at the sentiment, here's where you should have left. Right here, when the sentiment begins to decline and short volume rises above trend, just leave. You may miss a little higher low here, but you're going to avoid all that volatility. And look,
what day was that?
This would be, so the optimal time would have been about the 20, let's see here, what is that date?
Looks like
right
20th?
here.
22nd.
The 22nd of January.
Right.
And just leave right there, and then just wait for these conditions to improve, and then you can come back. When this line, this is sentiment and it's not volatile, this is price is volatile, wait for this line to begin rising and this line to begin to revert to the trend, and you will get gains. You know, there's always an exception to the rule, but that is the rule, and the rule is very reliable.
Yeah, so you're looking here, it doesn't seem to be the time to buy the dip on Tesla right now if you're looking at this. Exactly. And the same would be true for cannabis stocks, something that everybody has been fascinated with. They're not, there are not many of them, and they're a tough group because they don't represent a lot of market structure, or market capitalization rather. But if you look at that group, you can create a portfolio and look at them, you'll see that the trend in all of them is down, and short volume in half of them is over 50%. But anyway, so Spencer, I wanted to point this out, if I may. So this idea of very high short volume, you can screen for that in Edge. And the point isn't to highlight what all you can do with Edge, but I just wanted to note this, that if you're in a portfolio and you want to go screen for things that have very high short volume, different from short interest, you can do that, or very low. I just put a little query in here because I wanted to see what stuff is the most shorted in the entire market from a volume perspective, and it's Oyster Point Pharma and PROS Holding. They're 86% short. So the likelihood, if you were selling options, you would want to sell calls on those, because it's very likely that you would keep the premium. Those are very unlikely to post gains so long as those conditions exist. Yeah, it's kind of the opposite of thinking, because people are looking at a short interest and they're jumping in saying, oh, this could squeeze. Where you're looking at, from a different perspective here is the opposite, that these could actually continue to show weakness, because you're not looking at short interest here, you're looking at short volume.
Can I hop in for a second here, Tim?
Absolutely, Joe.
We're getting some questions here about time perspective on these trades, and I think that's one thing that we got to do a better job of figuring out. What are people's time perspectives here? On things. So talk. When you try and quantify or qualify day trading long term. I know I can just tell when you're talking. You're not talking about day trading, but just for our listeners, please.
I think of the approach that market structure offers as medium frequency trading. So high frequency traders would say they have an investment horizon of a day or less. And Dennis, you probably do too, but you're an expert, right? You're capable of doing things that maybe the average individual can't. So the hardest thing is to know, when do you come and go? What are your entries and exits? Yeah. And in medium frequency trading, you should keep in mind that you have about a 10-day window. That's it. You have 10 days to enter and exit. But if you do that consistently and you make 3 or 4%, do the math on that.
Yeah.
You will make 75, 100%. That's a very, very good return. And I think the firm that taught us that short-termism, and I realize it defies the Benjamin Graham classic fundamental value investment thesis, but the rules that govern trading today make this true. That the firm that taught us this is Renaissance Technologies. They perfected the art of medium frequency trading, short-term trades, and I think that suits the market that we have today.
Yeah, that's a great point here.
What
happens if they put this financial transaction tax
on?
Because we were looking at stats on the weekend. I had a weekend talking about a lot. We're going to have Bill Hertz talk on it tomorrow, but obviously Tim Quast knows this stuff too. So I want to get your thoughts here as well, Tim. Just on, we had it brought up in the hearing last week. I mean, there is this, thought process that, hey, we need to curb this speculation. Let's stick a financial transaction tax and curb the speculation. Obviously, I've argued I think it does the opposite. I don't think it curbs speculation. I think it hurts liquidity. But, let's get your thoughts here.
Well, it's ironic to me that Congress would entertain a notion of taxing the structure they created, right? The national market system exists because Congress added the national market system amendments to the Securities Acts of 1933 and 34 as amended in 1975. And the wheels of bureaucracy spin ponderously, and it took a long time for regulators to get around to crafting that marketplace. But there are 2-3 key things here. Number one, that is why we have a national market system that wants 100 shares to buy and 100 shares to sell all the time. It is impossible for any market to always have a supply of product. If you go to the grocery store and you head to the fresh produce area and there's no spinach, the grocery store cannot manufacture spinach so that you have some. There's none to buy. But the stock market does. And the regulators created that. The regulators gave market makers an exemption from the locate rules that the rest of us have to follow if we're shorting stocks. And so most of the time, the offer to sell is coming from manufactured stock. So that's necessarily going to speed up the process and create immense amounts of volume because prices will change all the time. So then for Congress to create this structure to try to ensure that there's always something to buy and sell and then tax it to boot is like telling everybody to stand up and then penalizing anyone who isn't sitting down. It's but will they do it? Well, yes. It reminds one of the line by Mark Twain, who said, "Suppose I was an idiot, and suppose I was a member of Congress, but I repeat myself." Not that I. It's a good line. So will they do something like that? I will hope that the regulators who know, the members of the SEC, they're not unintelligent individuals.
Yeah,
they know that
they understand market structure.
Section 31 fees fund the SEC. If we add something else to it, not only will we create, as you said, Dennis, a market that doesn't have the supply that the whole market now depends on, like it or not, this is the way that the market works, but we will probably damage the SEC's ability to fund itself. If volumes fall, it will have to raise those Section 31 fees, and they just cut them, as we talked about a couple of weeks ago.
Well, they cut them from $22 per million to $5.10 per million.
Right.
So to put that in perspective, what's being proposed? What's 0.1%? So right now the SEC is funded on the $5.10 per million. 0.1%, it was $1,000 per million. So you're talking about increasing it 200 times. 200 times. It's not like, oh, let's double it. No, let's increase it 200 times.
Yeah.
And the SECs are only on the sells.
Right.
The 0.1% they were proposing on the buy and the sell. So then it would be 400 times higher.
Exactly.
It's insane.
And so then what would Ken Griffin and Citadel, which is routinely almost 50% of all market volume and the consumer of 90+% of retail order flow from the 60 million online accounts that exist at the big firms, what would they do? Do you think that they're just going to absorb that and continue to to pay that kind of fee. No, either the cost of your trade, retail traders, is suddenly going to return, because it will not be possible for Citadel to afford to buy those orders if the cost of trading goes up 200
Spreads
times.
are going to go boom.
Exactly. Yep. So
They
I
pass
hope,
through. Either way, Main Street pays.
Exactly right. Yeah. There is no free lunch.
No, we see that.
Yeah.
So, okay, last thoughts, Tim. I mean, we look here and
market thoughts, overall.
Yeah,
market.
back to the market thoughts. I mean, we kind of
Right.
started with this, but maybe we should finish with it as well. Or maybe you should go talk. What's on your mind? I mean, we didn't ask you what's on your mind here, so we're throwing in questions. What's on Tim Quast's mind?
You know, that so to that point, we use what's called we call it broad market sentiment as our manage overall risk strategy. And generally and what you see on the screen here, I'm going to back this up 6 months. So the wobbly line is SPY. So it's the S&P 500 ETF. And then the smooth line is market structure sentiment for the S&P 500. We're not taking the index, but we're taking the 500 stocks that comprise it, and we average that data. And so it is very consistently true that when that line is, when market structure sentiment is over the red line, the market stops rising. It doesn't always mean it will fall. And when sentiment goes below the green line, the market rises. Well, where is it now? Well, it's way over the red line. So from a broad risk management perspective, short term, we would tell people, you want to cut back your exposure in the market until this line bottoms and begins rising again. So how long will that take? About 10 days. That's what we think at present.
Huh. So not buy the dip. No, I mean, it's
Not buy
good
the
to
dip
look
on
at
day
the,
one.
Yeah, exactly. That's right.
This is the only entry point the market has really given it full scale, where you can say, oh, I'm shoving all of my chips in. We almost had one at the end of January. Got all the way to that green line, and it would tell us that stocks are going to rise. But now there is clear risk, at least for 10 days, just for 10 days, that the market is really going to struggle to rise and probably pulls back. And so you want to avoid that. That's our view.
All right. Tim Quast is the founder and CEO of Market Structure Edge. Also, Modern IR joins us every Monday for Market Structure Mondays. Tim, we're getting a lot of people in the chat, or maybe it's the same person, I don't know, who keeps saying that you look like Tim Allen. So Tim Allen, who runs a market structure website.
Really? Not the guy from Home Improvement?
Yeah,
that's
the guy.
Is it?
Did you get that?
Yeah, yeah. That's what he's saying. You look like. So I guess that's a compliment.
Well, he's saying I'm getting old. That's because Tim Allen and I are both getting old.
Maybe. All right,
He's
Tim.
a Detroit. He's a Detroit guy.
Yeah,
Well, there you go.
Guy.
Yeah. Well, he's
All
got
right.
to be a good fella.
Tim, thanks a lot. We appreciate
you
the
guys.
time as always.
Thanks,
Talk
Tim.
to you again.
Thanks, Tim.